but the way you are working as a FICO consultant, what is, you have SAP architecture, okay, be it R3 or whatever it is, okay. The similar way on that architecture, the Vistex is nothing but a bolt-on component. What is meant by bolt-on component? It's a component which inherently works with the SAP component. In the sense that suppose if you have some of your legacy system, how they work is you typically put up some middleware to work with that legacy system. You have this TIPCO and all this, then you set up a communication. You have to update your SAP tables from that system. Sometimes that system also demands you to update their tables or their database to work both the things functionally and properly. The difference between the Vistex and your other legacy system is that the Vistex is a bolt-on on SAP. It means it uses your same tables, same ABAP language, and it takes the data from your same architecture and works on the same platform. So that's the beauty of the Vistex. Then somebody will ask why we should use Vistex. Vistex has some of the inherent processes which are called as a, wherever you are dealing in an organization area where you have some commissions, rebates, then some chargebacks, then some you have to make some price protections. In that case, SAP, though they have given some of the chargeback functionalities, but especially the retail industry, yours is which? It's a retail industry or what kind of?
It's a wholesale and distribution, basically supply chain.
Yeah, so yeah, supply chain industry. So it also falls into that. Whenever a distribution industry works, that when they distribute some of the components, sometimes they take some charge back, they take some money back from the customer, and sometimes they debit some amount to the customer, to their vendors, on the half of making some of the sales. So these both scenarios, basically you work as a many times as an agent, and that agent fees should be get paid to you. And this is the area where Vistex comes into the picture.
Okay.
So the major and worldwide talk object of the Vistex, right now I'm just working for one of the project in Spain where I'm working as SAP, but I could not go to Spain because I have already assignment in Qatar. I'm based at Qatar from last 1 year. So for that assignment, my client is totally working as an agent. Nothing but in previous assignments they were working as an agent as well as they were distributing, and some companies who are buying the Vistex are purely for their agency purpose. So there the majority of the work is happening into the sales side, which is SD side, where they have the chargeback management. Along with the chargeback management, the previously denoted term, which is my first project, was customer rebates. Now this has taken over by sales commissioning. Okay, so no person nowadays use the customer rebates kind of a word. Everybody is using that sales commission. Okay, and the third majority of the business which happens into the purchasing rebates. Like whenever you go and deal with your vendors, that time some rebates comes into the picture, and you have to put that rebate onto your vendor.
Right.
In some of the niche areas, there is something called as a price protection. That irrespective of the market fluctuations, I want to protect my price, and I keep on buying and selling based with respect to that price protection. So you being a FICO consultant, you know the usage of MR21.
Right. Right.
So MR21, what we do is we straight away go and update your moving average price.
That's
So
right.
by using MR21, we can do a small announcement along with the Vistex, and we can activate our price protection to cater the market fluctuations. So these are some of the high levels what Vistex capabilities are. Now let's go into the deeper, that what is meant by chargeback management, what are the different types of agreements, how the agreements, what is mean by IP documents and all this, what is a composite, what is a regular, all these things. Okay. So I'm on to the second slide. Can you able to see my second slide?
Yeah.
Okay, and one small request that during this course, if you find anywhere I'm going too fast, too slow, anything, If you are not clear, just stop me there itself.
Sure, sure. And Abhijit, one request is like, even though I'm a FI consultant, I do want to know more into the SD side, like how the pricing works and everything, because that will help me a lot to identify, as I said before, like, I mean, even though I'm a FI, they put me in SD kind of a duty except for the pricing, but I would like to know how the pricing flows into the IP side.
Okay, fantastic, fantastic. So you're more interested into the even the type of your pricing procedure. You can go back and see in your company.
Exactly.
But how it works that I can even able to help you.
Okay.
So the pricing in MM and SD works in a similar fashion. Only the condition type and condition records keeps on changing.
Okay.
Of course, nobody uses the standard pricing procedure. You must have configured the Z to the maximum extent.
That's right. That's right.
And unless and until you do the Z to the maximum extent, nobody will be called as a consultant has to prove himself by making Z. Correct?
Right. That's right.
Okay. Even in all projects, I do the same. Okay. Yeah. So you have the general experience about SAP SDMM and the FICO module. That's a good. And
Hello.
ERP system. Okay. You don't expect in this at least course. Let me move. Yes.
I'm just sorry. I lost the your voice in between. I mean, after the pricing, I lost what are you talking about. I mean, I was not able to hear.
Okay. Okay. Fine. Pricing basically. In terms of pricing, what your organization must have do, they must have taken some standard condition records and some condition types which they have copied to the Z, and they have set up a new pricing procedure. Typically, SAP comes up with their standard pricing procedure. What is the standard pricing procedure? That suppose I am a retailer in the market. What I will do is I'll say this is my base price. My base price is say $100. Based on my base price, there is some commission when I sell, and that commission is based on base price, which is a 1% is my commission. Then there could be some taxes, there could be some agency fees, there could be some handling charges. So all these components which constitute a landing price of that component selling, or whether it's a purchasing side, component buying, then this is nothing but a pricing procedure. So in pricing procedure, all sort of fees, commissions, discounts, tariffs, your base pricing, add-on components over your base, and the most important in sales side is your profit margins. How do you calculate your profit margins? Each company, some companies in I'll put you 2 examples of profit margins. In my first project, where we used to calculate the profit margin based on the material price, which is a moving average price. We have created a Z field into the sales area view of material master, and we call it sales cost. Okay. We put an add-on component automatically from your MAP to your sales cost, and that sales cost is considered as a base for your pricing procedure.
Okay.
In some companies, what they do is they copy the base price as it is, or the price from the sales order, the price which you put inside the sales order on the first page at the atom detail, and based on that price directly you can calculate your sales price. It depends upon what formula your organization is using.
Right. So yeah, we are based off of VPRS, the moving average price.
Okay, that's good. Yeah, because why it is better, I'm not your company's strategy maker, CEO, CFO, who decides that what is the better for us. But typically what I heard from our previous director is that we have to be constantly aligned with the rate what we are buying. because even the buying market is so fluctuating, your prices keep on changing. So it is always better to keep on MAP. It will ensure that none of your consignment will be sold into a loss.
Right.
See, the max is what will happen, that your threshold will call you and it will say that your MAP got increased and you can have the lesser margins, but it will always indicate you what are your margins.
Right.
So the calculation with respect to MAP, your sales cost, is always a better factor. Okay.
Okay.
Shall we move on to the next page?
Sure.
Yeah. Okay. So the first thing is, what we'll do is the IP module overview. What is IP? I'll speak in this module. It's nothing but incentives and paybacks. This module overview. IP module is nothing but the whole Vistex. That's all. Business process. What is a business process? In which business process it is applicable? Let's take the example of your own business process which is applicable with your client. Then what are the various agreement settlement parameters, in the sense which are the documents in SAP language, which are the source documents, which it could be purchase order, sales order, invoice, customer invoice, vendor invoice, what are all these documents. Then order to cash process, which is called as a worldwide, it is known as now SD module is gone, it's now OTC, order to cash. And then you have a chargeback document, then you have a accrual, then you have a claim submission, accrual settlement, partner communication if at all it is applicable, and sometimes you might need to do some settlement adjustments. So some people has given a privilege to calculate some of the settlement values. Okay, all these things we are going to cover in this. This is only, I'll talk about the chargeback, and after this I'll take you to the if you are interested, then I'll take you to the purchasing rebates and then price protection, this other stuff. Okay.
And are you planning to cover sales incentive, composite processing too?
Yeah, even you have the composite installed over there?
Yes, in the sales incentive, we are doing the sales incentive, yeah, and that's a composite processing.
Okay. Can I just ask the, I think technology people, what is the time frame we have available to have this demo so that I can plan myself? Hello. Hello. By any chance, Surendra, are you aware of the time frame and?
No, Abhijit, but time frame I don't have that. I mean, for demo I don't know, but generally they said like 35 hours of the course. So I mean, if you my main focus is chargebacks and sales incentives and the purchase rebates. I mean, if you feel like, I mean, you are in a better position than to tell whether better to go with the purchase rebates and customer rebates, or by just having a purchase rebate, we can manage. Can I manage with the customer rebates? I mean, is the business process is almost same compared to the purchase rebates and the customer rebates?
No, the business process is same. I'll say only the thing is it's exactly vice versa, because it's a purchasing side, that's a sales side.
Yeah. Okay.
But if you think logically from process stepwise, you just need to keep a mirror and you will follow.
Okay.
Opposite side you can.
So okay.
I think let's do this way. This is being a demo. They asked me when we'll go into actual sessions of each module. That time we can talk in detail of everything.
Okay.
Let me run through the demo quickly. So I'll give you overview of all these 4 blocks in quicker 5-10 minutes, and then the team, what is their plan on the rest of the thing. then I
Okay.
can spare a more time. We can have question answers. Each your particular business examples, or you can ask me, and we'll try
Sure.
to solve that.
Okay.
Okay. So
Okay.
yeah. So let me go through the IP module. Yeah. So what is first is the incentive. What is incentive? Incentive is nothing but a sales commission, and such as brokerage fees, loyalties paid. Loyalties are paid out to the sales agent. In some of the companies, they even pay the loyalties to their employees, who is the marketing head, marketing director. That based on this much volume, you will get this much loyalty. So this is nothing but an incentive, and performance rebate is nothing but a based on the revenue growth, which are typically calculated at the month end, quarter end, and they run this sales rebate or the sales incentive program at the quarter end and the month end. They calculate the amount, they check that, cross-verify amount, and that amount is getting paid to that individual sales agent or your employee or whoever it is. So let's go to directly enter into the module. Let me not go to the department. Okay, let's go back to diagrammatic view. You must have seen this kind of diagram before, correct?
I'm not able to see the next slide.
Or not?
Yeah. No, a slide. I'm not able to see your.
For some time.
We might be talking about that circle where the source document.
No, I'm on to the IP module overview, transaction module. There are some blocks.
Right. Yeah, I'm not able to see that. I'm able to see the
typically, yeah.
Yeah. No, I can see that.
Let's wait for some time because.
Okay.
Okay. Time delay happens always.
Yeah.
Okay.
Yeah.
So. Okay, so this is basically if you go to Google, okay, and if you Google for images on Vistex, definitely you will find this image. Okay.
Yeah, I've seen this.
This is a classic. Yeah. So this is a classic everybody uses in their presentation. So I'm not the other person. I've also used it. So what is IP document? IP is nothing but an incentive and a payback. So what does mean by incentive? Who pays? Who gets? Which items are eligible, and when it will be paid. Okay. So if we cover these 4 areas, it covers the whole of your Vistex thing. Okay. So who gets incentives and paybacks? The who get is either it's your business partner, is your employee, is your channel, is the purchasing entity who is dealing with you, is your retailer. If you are a wholesaler, then it could be a retailer, it could be a sales company directly. All these people can get incentive based on the sales volume or the sales performance or the sales values which they are making with your organization or with the third party organization. Because sometimes if you are buying some component, you being suppose a XYZ wholesaler, and you tell your sales agent that you buy this stuff from Dell, and if you buy from Dell, I'll get say $2. Okay, so that person directly raises order to Dell, but in between, you being the agent for this channel, you did this advertisement, you being the agent, by default you get a 2% of that. So this is also called a kind of incentive which you get throughout these processes. Now what are the sources from where you will come to know that there is some incentive or there is some payback which is eligible? This comes only from 2 sources. One is from SD side, which is a sales and distribution, and second is from materials management side. From sales and distribution, you have 2 options. One is sales order, which will directly indicate between you, your company, and your sales agent, or your sold to party or ship to party. Correct?
Right.
Within that, you can have a different partners. We'll come to partners, then we'll talk about that. Then the other option is either a purchase order between your company and your vendor. So this is one of the option where you can get your rebate. So these are the only two possible cases from where you can able to manage what is happening with your sales agent and what is happening with your vendor. Being said that, there are two more options. One is the invoice which is sent by your customer to you, okay, and the other, the invoice which is raised by you to your customer, and the other is invoice which is sent by your vendor to you. So these two documents will also reflect the amount of commission or the incentives which are involved in this. Okay, and once you get this amount, you accrue this amount. What is meant by accrue? Accrue is your financial term where you accrue this amount over a period of some time. Typically in organization where you have a big sales agent, nobody calculates this sales incentives or this rebate amount or the sales commission on daily basis. It keeps on getting accrued, and at the month end, on 30th of the month, before you close the books for that month, okay, before you run your transaction, before I run MMPV, MMRV, before that, what we do is we calculate this amount, what is the accrual amount, okay, we verify, and then we go for a settlement of this amount. As soon as you settle, it creates a direct, you can directly see the settlements are done in your FB03. You must have gone through all these things.
Right.
After the settlement, your FB03 gets reflected. Okay. Then this is a basic IP process. Now, how this IP process, where the sales order is paid, what are the different transactions during actual demo? Let's go by transactions. Have you ever customized any of the transactions in your organization, or what is your T code? /n/IRM.
Yeah, /n/IRM /IP CB
CB ASP.
Yeah.
ASP.
Yeah.
Okay.
Yes.
So
ASP,
those
CB.
Z transactions are not used.
Z transactions, no, no Z transactions.
Okay.
Only for the partner communication upload we came up with a Z transaction. That's about it.
Okay, so that will be Excel file upload or one
Right.
HTML file upload.
Excel file upload.
Okay, so no problem. That's a see, it's a good to work in an environment where you have a lesser Z, because there only you come to know as a consultant what is actually available in base models.
Right.
Okay, yeah. So this is about IP document. Let me go to the next slide. And then different IP. I'll move this. Okay. Now this is important slide. Okay. This slide differentiate. Are you on the slide?
No, not yet.
SAP standard for. Okay. Let's wait for.
Yeah, I'm in the slide.
So this is the slide which talks about the difference between your SAP and the difference between your SAP IP. IP in the sense your Vistex functionality. So what SAP gives? SAP gives you sales order. Okay, whenever you make a sales, you have an outbound delivery. Okay, because you have to ship that product from your warehouse to your customer's location. Correct. So that's outbound delivery. You give some instruction to your warehouse team, and they make outbound delivery. Then your finance team or sales team, whoever is the responsible, makes a billing document with respect to that sales order and outbound delivery.
Yeah.
And once your customer pays you, that time it's a credit memo or receivable. It creates a receivable in your account, and that is nothing but your incoming money. Okay, so these four blocks are possible in SAP, which are highlighted in yellow. Now Vistex completes this chain. What Vistex does, it's create the agreement, which is called as, it could be your chargeback agreement, it could be your price protection, it could be a rebate agreement. There are different types of agreements. Okay, it defines this validity start and validity end of this agreement. That I say that me and you are bound to follow this agreement for this amount with this scaling condition. If you follow the business, if you sell my 1,000 components, I'll pay you 1%. If you sell 2,000 components, I'll pay you 2%. If you say 3,000 components, I'll pay you 4%. Something this kind of sales. Sometimes these scales are on percentage. Sometimes there are no scales. Sometimes there are direct target basis. So all these things are recorded in the agreement. Okay, and these agreement captures this whole cycle based on your sales order. So what is exactly outbound delivery you are making, and this outbound delivery once you make, it creates a chargeback document. So it accrues that this is my agreement, this is my sales order, and out of this agreement and this sales order, based on the agreement, how much am I utilized? This utilization is nothing but a chargeback document. Chargeback document nothing but captures data from agreement and a sales order which is actually booked, and it keeps on calculating what is the chargeback amount based on these two factors. Okay, so it's nothing but working as Excel sheet which takes the data from your agreement and sales order and calculates smartly. Okay, this is your amount because these are your terms and conditions. Correct? Now, once you create this chargeback document, you have a next option. What is next? Is you being a finance person, you come into the picture and you see that claim and you have to process that claim. Okay? Then you process that claim because there are two parties dealing. One is your company, one is vendor or a customer. So you have to send it to your partner. Partner will upload his file where you have done your Z upload and all these things, and you will match both the files. Okay, and even this matching in your composite IP system will show you with reference to different colors that you put $2, your partner has requested for $2.25. Okay, so there is a difference of 25 cents. What should we do? Approve, reject, park. So all these things will happen, and then your claim settlement will happen. Okay, so this is the complete cycle which we will be doing inside the Vistex. This is onto the sales and purchase both together. In sales cycle there are some different, in purchasing there are some different options available. Any questions related to this slide?
The question what I have is, let's take, in our organization the way we are doing is we are recording the agreement. Let's take that we have a separate condition type like eligible for office, eligible for sales office, eligible for customer hierarchy, and eligible for material. So those condition types are in both the regular pricing procedure, which will be used in the sales order and the billing document, as well as in your chargeback pricing procedure. Is it a common practice that use the same condition types in both the sales order as well as the IP pricing procedure, or you don't have to code it in your regular pricing procedure, but at the time of evaluating your by creating the IP doc, you can include those conditions. How does that generally it work?
Okay. No, generally it is that when you configure your pricing procedure, whatever conditions you have, all these conditions should be present in your chargeback document. Otherwise, your chargeback document will never come to know that suppose this 20 cents has come from which condition and what. See, here you can name it as ZRV6 and there you can name it as a YRVZ. No problem in that.
Right.
But there has to be a link between these two, that this is nothing but this. Otherwise, your salesperson will never come to know that this chargeback is calculated based on this components.
Okay, so in order to salesperson to know that how much chargeback is being recorded on a sales order or a billing doc, we got to put the condition types both in the regular pricing procedures as well as in IP pricing procedures. Okay.
Yes. Keep my suggestion is keep both the conditions, even their name and description as the same. Okay. yeah, it's still what I'll do is I'll go back to my previous project documents and I just check what are the naming convention what I have used for that pricing procedures.
Okay. Okay.
So I'll even clarify this point again.
Sure.
Okay.
Okay.
Then this is on the next slide. The same thing what we discussed is what is the chargeback life cycle is given on the slide. I'll just keep this. Then of the agreement workbench, how this agreement workbench works. Okay. So have you created some of the agreements by yourself?
In tests when as I said, like we introduced a new agreement type and IP type. That is the time I created the agreements and came up with this condition types. SD pricing a person created those condition types, but I condition type into the agreement.
Okay, fine.
When I'm creating the new agreement type, yeah.
Okay, so agreement type is based on what type of transaction you are dealing with your customer or vendor. You have a different transaction and you create a new agreement. Okay, and each agreement you can define your similar like your SD, MMFI. You can have your own number ranges for that agreement. All these configuration are available in standard. You define what is your agreement currency, validity, start date, end date. And once you create your agreement, it shows you whether your agreement is in block stage, valid stage, released, or the status is monitored automatically. Then your party with whom you are making this agreement, which is a partner, okay, the owner of this agreement, all these things can also be defined. And the main thing in the agreement is the rules. Okay, so you need to define the rules. There are standard drop down for rules. These rules are nothing but your conditions, what you just spoke. You go to the drop down, you pick up that conditions, you put the scales again that conditions, and these scales works with respect to your sales order inside your agreement. Okay.
Okay.
Then there are some functions like how to search your agreement. You must have gone through all these functions, search functions. Okay. Then then the most important is what are different combinations with which you can make your agreement, that sales or distribution channel vendor. So unless and until these conditions meet, your chargeback component will not come into your chargeback document. Your chargeback document will not get created. Suppose sometimes there is a complex requirement that there is a one sold to party, there is one buying party, and you say that if the distribution channel and sales organization and the material is this, then only this agreement is valid. Okay, so all these combinations you can specify within the condition type, and when these conditions meet, when this material comes, this sales organization, this purchase organization comes, then only this chargeback comes.
Okay.
Typically in support projects at the end, we get a lot of tickets. Now you are going live, correct? Soon.
Right.
And you can expect a lot of tickets, especially in this area. Like I did my agreement right, my sales order is right, still my chargeback is not happening. My suggestion is immediately go to the first, open two screens, open agreement, open sales order. Check what is specified in agreement. Sold to a party, shipped to party, vendor and material. Check whether all these are present in this sales order. Though, go back to that person, whoever has raised that L1, L2, L3, L4 ticket. Tell him that, my dear friend, this is not as per the agreement. Change your sales order or get a new agreement. Then immediately your chargeback will happen. And 90% of the tickets in the initial 2-3 months will happen for these cases only. Okay.
Okay. So basically, when you go to the sales order and in the conditions tab, analysis you will know, right, whether it is which condition type it. Okay, okay, got it.
Yeah. Okay, so I'll just keep some of the slides. Order to cash process. Yeah. Then the way I said, I'm onto the slide where this OTC process where the source documents are specified. There are two source documents. One is the billing source document and another is the sales order source document. So both these source documents are nothing but creates the IP document. So either you can create with respect to invoice or sales order. Both works as a similar fashion. Okay. So then before we go to accrual or something, reprise something, any questions on this?
The question is like if in typical organization, like do they go with the source document as a sales order or the billing doc? Because just because the sale happened, it doesn't mean that you need to pay the commission or doesn't need to get the charge back from the supplier, right? So is it a common practice to go with the billing doc as a source document for the chargebacks?
No, its answer is very simple. No, whether you go with the sales order or whether you go with the billing doc, it always checks whether you have a relevant delivery has been made and the relevant invoice has been made, then only the chargeback will be created.
So is it only the invoice or does it go also look whether the accounting document relates to accounting or not?
No. See, the thing is accounting, your accounting entries will come at a later point. This I'm purely talking about the sales invoice which is raised after the your outbound delivery.
Okay.
Yeah, your accounting booking will happen which might include which will definitely include your commissions from your chargeback document.
Right.
So you should not book into your accounts unless and until the chargeback has been done.
Okay.
Yeah. Any questions? Some questions on this?
No, I'm fine. Thanks.
Okay, good. Is there someone from Attain Technologies is in the call?
Initially
Yes.
there was one person, but I can't.
Yeah. Abhijit and stuff. Yeah, Surendra, tell me.
Yeah, hi. I just want to know, no, this is Abhijit here. I want to know this, what is the time for this online demo which we scheduled? So I can go with that pace because it's now 8 o'clock and we just...
It's 7 to 8 o'clock. It's 7 to 8 o'clock.
7 to 8 o'clock. Okay, fine. So, Surendra, let's do this way.
Okay.
Instead of going into accrual claim submission, which is pure your FI area, and we talk about how the claims are submitted, how the indicators change their color during the accrual and all this process. Let me quickly jump to the purchasing rebates. I'll just give you a high idea about purchasing rebates, and then let's stop for a demo.